heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Caroline Hyde of Bloomberg's World Headquarters in New York. Ed Ludlow is on assignment in Sun Valley. This is Bloomberg Technology. Coming up, Elon Musk launches his competitor to OpenAI. We'll bring you all the details of his sixth company, xAI. And we'll talk big tech regulation. That's as FTC Chair Lina Khan appears before a House Judiciary Committee hearing on the oversight of the competition regulator. More ahead. Plus, the former CEO of crypto lender Celsius is arrested, charged with fraud and sued by 3 regulatory agencies over the company's collapse. We'll bring you the details. But first, let's get ahead of these markets. Once again, we're on the higher note. Abigail Doolittle has it all.
Yeah, we have a solid rally here, Caroline. And for some of the indexes, 3 to 4 days in a row, big tech, its best day since the end of June. So the tech buyers are out. This, of course, is the Bloomberg Dollar Index, and yields are lower. We'll take a look at that in a moment. But the New York FANG Index, pure mega cap tech up 1.8%. One of the big helps, Alphabet up 4.9%. I was just searching the tape right now to see if anything new has come out. I'm not sure that anything new has come out, but what on the year into today, we had Google up about 38% on the year. Not so shabby, but when you compare that to Meta's 160% move on the year, perhaps some investors looking for a potential catch-up trade. Amazon also up 2.2%, of course, record Prime Day sales numbers. As for one of the big drivers, again, the Bloomberg Dollar Index down for a 4th or 5th day in a row, the longest losing streak of the year. But take a look at the 2-year yield. It is over the last week down 34 basis points. Again, on that cooler CPI and then the PPI print today, inflation concerns are fading. So that means that valuation concerns on big tech stocks with yields down also fading, and maybe the idea that the Fed is going to stop its hiking cycle sooner rather than earlier anticipated. One thing I will point out, though, Caroline, there is still the possibility that big tech could get volatile. If you take a look at the VIX relative to the VIX-in, there is a 6-point spread. So investors still worried about tech at some point over the next 3 months, but just not right now. And then finally, Meta over the last 4 days surging. Today, of course, the announcement or the idea, the FT report that they may be planning to commercialize their AI product to compete, of course, with both Microsoft and Alphabet. And that on top of Threads in the year of efficiency. Well, again, Caroline, Meta on the year up about 160%.
Phenomenal outperformance. Abigail, thank you so much. Well, let's talk about who else is looking into the world of AI at the moment. Elon Musk taking to Twitter Spaces to discuss the launch of his ChatGPT rival, xAI. That happened last night. He says the company's mission is to understand the true nature of the universe.
From an AI safety standpoint, I think a maximally curious AI, one is that it is trying to sort of understand the universe, is, I think, going to be pro-humanity from the standpoint that humanity is just much more interesting than not humanity.
Joining us for more, Ed Ludlow, out there in Sun Valley, where I'm pretty sure this is a hot topic.
It's a hot topic, and xAI was a hot topic in the last 24 hours. Understand the true nature of the universe. I've spoken to so many sources in the AI industry here on the phone. They don't really know what it is that they're building, right? Is this a company that's building a foundation model or large language model like Inflection AI did, separate to OpenAI in GPT 3.5? Or are they doing something kind of more niche or specific in the field of machine learning? What we know is they're hiring in the Bay Area, and they've assembled this all-male roster of tenured Google DeepMind researchers and also some pretty key names from academia in Canada.
Yeah, I mean, I think it is
leading the charge.
Notable, as you say, at the moment, not a particularly diverse set of people, but certainly with a wealth of experience from across private markets and indeed from academia, as you say. Ultimately, he said for months that he wants to perhaps bring some sort of competition to OpenAI. He's been frustrated by the team with Microsoft. He's worried about its for-profit nature after he stood down from the board in 2018. But what ultimately does he want out of this? I remember, what was it, back in March, he was saying, hold on, we need to put a pause for 6 months, and then he's actually busily building himself?
So spoke about this exact issue of Reid Hoffman yesterday. You know, he acknowledged that OpenAI's origins are all directly tied to Elon Musk. He was an early investor. He was in on that initiative. But the way that Reid Hoffman put it, Caro, he said, I'm askance at the idea that this is somebody who signed that pause petition and yet in the interim carried on with his own efforts in the field of AI. It doesn't really add up. We know his concerns are sort of existential. Still working on it.
He is. And you're still working on staying with us for a moment, Ed. Hold tight, because we're going to join the conversation now with Gerber Kawasaki President and CEO Ross Gerber, who, of course, you were an investor in Twitter. You became an investor in when Twitter went private. You stuck with it. It, of course, was folded into the now parent company X. And now we have the birth of XAI. Look, given your expertise within Tesla as well and a firm commitment to that company, is he too busy? Is Elon Musk now a sixth company he's leading?
Well, yes and no. I think that, of course, Elon's been too busy for a decade now and somehow has survived. And I think a lot of these projects he spearheads and puts a lot of like sort of initial inertia into, and then he turns them over to really competent leadership, and he builds great teams of engineers that we know he's good at. And that's what he's doing with XAI. And I don't think he's really quite sure yet what it'll be. And that's kind of the genius of Musk is, you know, he kind of builds these teams with a general goal, but what will come out of this, I'm sure he has no idea yet, but it'll be probably pretty interesting.
Ross, was the idea of XAI in the incorporation documents for X Corp at the time you invested?
No, I mean, so they kind of said, you know, there's a lot we don't know he will do within this structure, you know, but it's really about acquiring Twitter. But I think if you really understand Elon, he always sees things way further than I do as far as like the way he sees the future. And Twitter is just a wonderful source of data to build an AI company around, don't you think? So I think, you know, there is a grand vision of he's got the data, and that's why he's protecting it so much with the limiting of the scraping of the data from Twitter, is he's trying to protect his data because he knows it's super valuable. Twitter data is way more valuable than metadata. You know, metadata, you know, is much more personal about people, and Twitter data is really all about the world. So if you're worried about humanity and sort of bigger issues, I think Elon, you know, is building something that could be incredible, as always, really.
When the XAI Twitter handle tweeted, you know, questions to its following, I replied saying, how many H100s do you have, in reference to NVIDIA's most powerful GPU related to building of LLMs and the inference side. Lots of people replied and said, what are you talking about? Elon's got Dojo. So what's your interpretation of the read-through between XAI and the work that Tesla's done historically in machine learning neural networks?
Right. So, you know, I'm not really an engineer. I'm not an engineer. In fact, I feared those classes in school. So my understanding of it is if you're going to build AI quickly, you need NVIDIA chips because they're scaling chips that are crucial to this. And Tesla has their own AI chips, and they're building autonomy around them, and they design their own chips. And then they have Dojo, which is really like a training mechanism, which would really speed up the process of learning through this AI mechanism. But I don't see any way around them buying lots of NVIDIA chips. NVIDIA is really the hugest winner in the AI revolution, being, you know, the brains behind AI and the hardware brains. So I think that it doesn't really matter. You know, the NVIDIA and the Tesla chips are kind of similar, I think, in a lot of ways, and they serve the same purposes. But Tesla designs its own chips and designs its own training, and that is something that people should pay very close attention to, because this is really Elon's expertise, actually. He's not going into something you know, like out of his range, like Twitter, you know. So I'm very bullish on this, you know.
And of course,
I think he's the right person.
There is a different leader for Twitter now. Lydia Yaccarino is the CEO. But I'm interested more broadly on the return on investment that we're likely to be getting from this. And ultimately, this is a lot of the time when he bought Twitter, it was about more than just of course, the profitability and the rewards there. It was about building something he thought would ultimately be better for humanity. So is SpaceX to a large extent. Now we see it with XAI. How much do you pay attention to some of the concerns he ultimately has around AI's risks? Of course, he's got the Center for AI Safety on board as an overseer of this new venture.
I think his concerns are very legitimate, and I'm really happy he's bringing them up very early in the process of this technology, because if somebody would have done this during the development of social media, it might have prevented the mass amount of harm that Facebook and Instagram and other social medias has caused to our youth, for example. And so the fact that he's stepping on early and saying we do need to look at the guardrails around this, because the opportunity for abuse, misinformation, and then ultimately bad, outcomes from AI are a possibility. And so I think his focus on this early on is actually a great thing. And I think he's in a position where he can build a company with very long-term focus, because it's a privately held company with investors like myself who really don't care about the short term at all. So he's really in the right position to execute his plan.
But Ross, I remember when you joined us, I believe, to really vent some frustration about leadership at Tesla, distraction, concern. You were so concerned about it that you were wanting to help take a board seat to help drive this company forward. What changes now with the birth of yet another company? You say he's been, too busy for about a decade, but what gets sacrificed here as an investor in his other companies?
Well, two things. One, he did find a CEO for Twitter, and all the things I was pushing for have happened now, from advertising to succession planning and changes to the board. And we've seen the stock recover. So it's been a hugely successful campaign economically for me and my clients and for Tesla shareholders. So I've been really happy about that. I don't look at XAI as like such a distraction like Twitter, because with Twitter, he was really like getting killed every day. He still gets killed every day with half his decisions. And just his whole thing on Twitter has been, I think, somewhat detrimental, if not very detrimental, to his image. But like when you look at doing an AI company, that's like right up his alley. And he's most competent and capable of leading a team in this area without really distracting him. And there's lots of ancillary benefits that Tesla and his shareholders will get from this development versus Twitter, where I think the risk reward was much worse for Tesla shareholders, for sure.
Ross, also in the news cycle, Activision, Microsoft. You are an Activision shareholder. The merger arbs say that the chance of this deal going ahead, 80 to 85%. The FTC filed its appeal last night. What do you see as the chances of this deal going through?
Well, just with full disclosure, we sold most of our Activision in the last 2 days after the FTC decision at around $90 a share or above. We felt the risk reward of just more time. It's a cash deal at 95, so we've moved on. So just out of disclosure. So I do think the FTC is going to lose again. Linda Khan and FTC have way overstepped their bounds, taking very weak cases to court to hurt competition in gaming. They've hurt competition. They weren't helping at all. And so I think, the FTC needs to really reconsider what their purpose is, because we're a capitalistic, society, and businesses buy other businesses. So they need to find better cases, and there are plenty of good cases they can jump in on. How about the Live Golf PGA situation? Where's the FTC there? They should be blocking that 100%. So, they need to focus on something a little bit more meaningful.
We're going to let you get back to some well-earned golf playing now, it seems, Ross, because you're on vacation and you came on just for us from California. We thank you very much indeed, Gerber Kawasaki President and CEO Ross Gerber, and our very own Ed Ludlow, who is not on vacation, but he's out there in Sun Valley working extremely hard for us, and we're going back to him in a minute. Thank you both. Meanwhile, coming up, Huawei revealing more than $500 million in sales from its patent business. We'll discuss next with some key executives from that firm. This is Bloomberg. Huawei, Well, it's disclosing for the first time its annual income from its patent licensing deals, showing the company is making in more than $560 million last year from the part of the business. After, of course, its business model of old was kind of upended by US sanctions of the Chinese tech player. Joining us now to see how this galvanizes growth for the future, Stephen Geisler is with us. He's US Chief Intellectual Property Counsel at Huawei, as well as Andy Purdy. He's Huawei USA CSO. Gentlemen, both great to have you. Stephen, just a lot of patents, thousands that Huawei has. How do you ultimately look to monetize all of this? You've been launching this licensing website as well just in the last few days. You're providing details of how you're going to have bilateral licensing programs. Do you sell to Apple and the like, even within these sanctions? How do those sorts of conversations go with big tech giants?
Well, so regardless of Huawei sales, our patent portfolio covers many of the telecommunications products globally. So for instance, in 5G alone, we own approximately 20% of all standard essential patents globally for 5G. So where our competitors or other market entrants are using 5G technology, they would need to pay for a license from Huawei. We're not, though, primarily concerned with monetizing, making revenue. In fact, one of the drivers of releasing the number, $560 million in revenue last year from patent licensing, was to show that in the grand scheme of things within Huawei, that patent licensing is not our business emphasis. Certainly my team, we're proud of the work that we've done globally in licensing, and for 2 years straight, we've been net positive in patent licensing, but Huawei certainly is a product and services company. So this is transparency to allow people to see within context that it still is the productization that Huawei is driving for.
Andy, therefore, help us define what Huawei is now, because in many ways you have pivoted. You were survival mode, now it's more focused on B2B. How do you summarize really what Huawei stands for now?
Well, we are now at a new normal phase of the evolution of this company. The context is there's technologies converging, 5G, software, cloud, sensor technologies, artificial intelligence, all these things are converging. So our strategy with an incredible investment in R&D, we now have 114,000 people in R&D out of our $208,000 employee mixture. So we've been adjusting our portfolios to bring value to the network carriers, the enterprises, to the consumers, embracing the key trends of digitalization, intelligence, and carbon neutrality, helping to reduce the carbon footprint. So we are a company about connecting the world, about bringing technology to every home, every company, every organization. And frankly, it's really exciting to be a member of this, an employee of this company.
Andy, it's hard, and you know this well, having worked with the White House prior to Huawei, to do this while navigating such sanctions. Do you ever see a world in which that will be alleviated in this current geopolitical environment?
Well, there's an awful lot of countries in the world that are eager to do business with us, and thousands of companies to partner with us. And in fact, when you look at the world, we have formed digitalization partnerships. When you global Fortune 500 companies with 267 of the global Fortune 500 and 700 cities. So we're not so concerned about what we can't do. We're excited about what we can do and how we're bringing the technology to the world, including 5.5G and including our Pangu AI and AI for industry approach, which is, I think, going to generate quite a bit of revenue.
Okay, I like that you went to the AI. How much focus is there on AI IP at the moment, Stephen?
Well,
I'll defer to Andy on the AI.
Yeah, so our company looks at the larger world where the future of computing is everywhere. There's going to be an intelligent world. There's going to be Internet of everything. And 5G and increasingly 5.G are going to help bring that about. We think artificial intelligence is going to rewrite everything. And so our lead for Huawei Cloud, for example, Zhang Pingan, has said the Pangu model of AI is not about writing poetry. It's not generative AI like the most publicity. And these models, the Pangu model empowers every industry with, in effect, an intelligent assistant to make them more productive, more efficient in a real learning environment. Frankly, when we look at the future, we believe, Ken Hu, our vice chairman, has said that when you look at AI generally, 98% of AI will be industry and some agriculture, and only 2% will be consumer. So hopefully the United States is going to really get all in about the benefits of digitalization and transformation.
It certainly feels that way when, in terms of the level of conversation we have here on the show about AI in the US. We want to thank you both, Stephen Geisler, of course, US Chief Intellectual Property Counsel at Huawei, and Andy Purdy, Huawei USA CSO. Meanwhile, coming up, we were talking about FTC Chair Lina Khan just with Ross Gerber a moment ago. Well, in fact, she's up in the House at the moment testifying for them. We'll have all of the details next. This is Bloomberg. Senator Elizabeth Warren says she applauds the FTC for trying to take on Microsoft in its merger with Activision Blizzard. Here's what she had to say on Bloomberg's Balance of Power last night.
The merger itself is not legal, but we have an opinion from the judge. I want to commend the FTC for taking on hard cases, taking on big companies, taking on cases that in the past often just slid through, but that are clear violations of the law. I applaud what the FTC has done, and I say stay after it.
Meanwhile, underway, the FTC Chair Lina Khan is currently testifying before the House Committee on the Judiciary, on oversight, in fact. Well, let's get to Bloomberg's Caroline Hyde, who was busy conducting that interview with Senator Warren. And, well, she's a Democrat, and she speaks highly of a Democrat-led FTC at the moment. But it's kind of partisan, and certainly that committee that Lina Khan's in front of at the moment is an emblem of that.
Yeah, exactly right, Caroline. I just returned from Capitol Hill. I was standing outside that hearing room, and Democrats I spoke with, like Senator Elizabeth Warren, did have kind words for the FTC chair. Republicans, though, not so much. In the hearing room, Chair Khan has been accused of being a bully, of her leadership being a disaster. And outside of it, I spoke to several Republican members who sit on the committee who suggested that she's an ideologue, politicized, and that her losing record shows that she's pursuing cases that don't actually have the law on their side. A lot of criticism of her leadership of the FTC and the degree to which she has pushed this kind of anti-competition agenda, to summarize their words. I would note also that this is coming as she is trying to fight the fight on the Microsoft Activision Blizzard deal. Of course, as Senator Warren was just speaking with us about last night, the idea that the judge ruled against her in that case. The FTC does plan to appeal. When I saw Chair Khan walking into the hearing room earlier, I asked her why she was appealing, if she thought that appeal would be successful. She didn't answer either of those questions, Caroline.
She's answering questions now. Caroline Hyde, I'm sure you'll be there putting more to her very soon. We really appreciate the time. Thank you. Meanwhile, coming up, we'll stay in Washington, where the former CEO of bankrupt crypto lender Celsius got charged with fraud and is now sued by 3 regulatory agencies. We'll have all the details. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Quick check on the markets for you because we are higher. We are higher because inflation is cooling. We only had CPI yesterday. We get PPI today, and it adds some fuel to the NASDAQ 100. Big tech on top. We're seeing the 2-year yield just crescendo lower at the moment. That's the opposite way of saying it, I should say. Spiral lower by some 13 basis points at the moment. 4.61 is where we trade. We're seeing Bitcoin actually getting a bid as well as the dollar goes lower, up 1.8%, still at that 30,000 or thereabouts level. Moving on and go to some individual names because, boy, Amazon Prime Day and days as it was, did well. We're up more than 2% for Amazon. We're seeing Alphabet actually getting a higher price target, at least from Morgan Stanley, up more than 4.5% on the day. As once again, there seems to be the moon music around Bard. It's AI really managing to win some hearts and minds there. We're also seeing continued focus from the business on, well, where it now monetizes all of this. We're seeing the Golden Dragon China Index. This is the NASDAQ Golden Dragon, up almost, 2% now. We're seeing China once again committing to, stop punishing their tech sector and instead start supporting them. It seems to be the read across the investor market right now. We're currently up 2% on some of those big publicly traded Chinese companies that trade here in the US. Meanwhile, let's talk a little bit of what else is happening in the US and a bit of a crackdown on crypto still. The former chief executive of the bankrupt crypto lender Celsius arrested today, charged with fraud in addition to being sued by 3 regulatory agencies over the company's collapse. Pleased to say Bloomberg's Alison Vesperil is joining us for more. And were we anticipating this?
You know, we knew that the investigations were ongoing, and last week, actually, I had reported that the CFTC, their investigators had determined that Alex Mashinsky and Celsius had broken their rules, and that basically the commissioners were just going to take a vote if they agreed. And we knew SEC and SDNY were also looking at this. So a little bit anticipated, but, it's always, we don't know until we know.
What is the read across now? Because we have, ultimately, in some Bitcoin prices we've stabilized. It feels as though the noise, the storm has started to dial down, even though, of course, we have the SEC really focused on some of the key big crypto players here in the United States. But what does this ultimate focus on the demise of Celsius mean for the rest of the sector?
I think it means that we're going to continue seeing these sort of enforcement actions, specifically for companies that were part of the turmoil last year. We've now seen criminal charges against executives at Terraform Labs, which was the issuer of that Terra USD stablecoin that collapsed last May. We've seen criminal charges brought against Sam Bankman-Fried of FTX. And so now these Celsius charges, it's all pointing to the fact that we can expect there to be a lot of enforcement going forward.
And to a point, just run us through exactly what is being alleged of Alex, because I think the fact that maybe he was not playing as many others would wanted him to is kind of key for the crypto ecosystem as well, to show that there was wrongdoing involved here.
So there are a slew of allegations. As you mentioned, there are 3 regulator lawsuits in addition to these criminal charges. But at the core of it, it's basically that they're alleging that he lied about the financial success of the company, including the amount that the company raised in its initial coin offering. They're alleging that, the firm was placing risky bets and then not disclosing that to investors, that they were manipulating the price of Celsius's native token, CEL. So it's a lot of misleading customers, misleading investors, that sort of vibe. And we also know that there are criminal charges brought against another Celsius executive, the former chief revenue officer. So, it's not just Mashinsky here.
We will follow it. Alison Vesperil, thank you so much for bringing us up to speed in the latest. Meanwhile, we want to take a hard turn here and think about an area of focus when it comes to Black technologists and entrepreneurs and VCs, because Black Tech Week starts on Tuesday and is in Cincinnati now, connecting CEOs and investors to rising Black entrepreneurs. Backed by headlines like Issa Rae, if she isn't busy on the Barbie tour, Black Tech Week aims to really bridge the gap between minority communities in the tech and business world. Joining us now, I'm really pleased to say, is Lightship CEO Candice Matthews, and also Brackeen as well, and who also is running this event and who's going to be involved in it, Revolt CEO Datavio Samuels. And both of you, welcome. Candice, to you first. You brought this from originally, I think it was born in Miami, Florida. You brought it to Cincinnati. Why?
Oh, think about all the Fortune 100 companies in Cincinnati. It's a great place to connect Black entrepreneurs to enterprise contracts, and that's what we did our first year, and we'll continue to do that. I think you probably know that 1% of the U.S. GDP is invested into venture capital, yet venture capital accounts for like this 57% of the U.S. market cap. We want to make certain that Black founders are involved with that, and Cincinnati is the right place to do it.
Okay, let's talk about an entrepreneur, a leader, a business leader, and in fact, someone that many, I'm sure, will want to emulate. Just, Datavio, your background, the fact that you were, by the age of 25, already got a BA at Duke, you were then at Stanford getting your MBA, you're now leading one of the fastest growing media companies out there. And I'm interested as to what you want to be able to speak about, talk about, see, and shine a light on, because many might feel that, well, you're hard to replicate.
Yeah, the notion about me being hard to replicate always breaks my heart, because I believe that in order for Black people to succeed, it can't be that you have to have the perfect background, right? It can't be that you had to go to Duke University and Stanford University in order to make it. What I'm hopeful and excited to talk about while in Cincinnati at Black Tech Week is this notion of the importance of Black people owning and controlling our own narrative. Black people across the world have had a perception issue, which I think absolutely contributes to the policy issues that we have. And those perception issues are driven by the stories and the negative stories that have plagued us for hundreds of years. And so if you want to change the perception, you have to change the story. If you want to change the story, you have to change the storytellers. And so I'm excited to have a conversation about the importance of changing the story, changing the narrative, how we can do it in businesses like mine, of course, but in tech. What are the stories we're telling within the tech industry space? What are the stories that we're telling in our marketing, even just the way that we show up as tech leaders and entrepreneurs? That's the conversation I'm excited to have.
And that's exactly why Sean Diddy Combs set up Revolt, and you now lead it. Candice, I'm interested in, therefore, the perception. Many would say the perception of this economy is one that is slowing, that one where VCs go back to backing entrepreneurs they know, understand, and have already proved successful, that banks lend to people that look like them, that fear, and ultimately that it's the women, the minorities, the people who are new to entrepreneurship and VC that suffer. Is that something you're seeing, or is that just a wrong perception?
That's just the wrong perception. If we can invent a narrative, we can reinvent a narrative. And so the entire week next week, you're going to see amazing founders who are growing big things. I mean, look, Procter & Gamble just acquired a company from a Black founder, Monique Rodriguez from Mael. She's built an amazing business that will be a $1 billion brand soon. And so, like Detavio said, it's just time to make certain that people understand that this is available, that these founders are out there. And really, if they're not looking, they're missing out on an opportunity of a lifetime.
Detavio, of course, many would at the moment be wanting to see a commitment, whether it be from big companies continuing to put money into diversity to ensure that we get diversity at the founding of companies, when indeed when we're seeing the building blocks of AI at the moment, everyone's discussing artificial intelligence, worried about the bias therein, ensuring that there are diverse voices at the very top of these companies. How are you seeing the landscape change as you go throughout your leadership of a business? How does it drive you as a leader of color at the moment?
Yeah, I think that we're all here for a very specific reason, right? When you look at the unfortunate murder of George Floyd, without question, in my industry, it sparked noise. It made people want to behave differently. That's where we see advertisers and brands start to come out with these commitments about growing Black-owned media. And if you think about what it took to make that happen, like you literally had to have a man murdered for 9 minutes. The whole world had to be shut down to be able to watch it in order for people to then have that desire and that momentum to create change. And so my belief, and what I say all the time, is we are the people who are here for a reason, whether you're sitting in my seat or Candace's seat, or you're the CMO of P&G, McDonald's, Google, I don't care what it is. We are all here in this very specific moment in time for a very specific reason. And it is up to us to create change, to shift the algorithm, in my opinion, for all oppressed people. Of course, I'm leading a charge in a revolution to fight for Black leaders, Black community, Black culture, and Black storytellers. But I think this is a moment where we all need to look around and say, it is the job of the oppressed to be on the side of the oppressed. How do we fix the world and change the world moving forward?
Detavio, has that got harder given the economy, given people's ability to put money behind marketing and advertising for you at the moment?
Yeah, without question. I mean, I think the last 2 years, we can always brag about the growth that Revolt has had. We always talk about how we're the fastest growing Black-owned media company in the world right now. That said, you can absolutely feel the momentum start to slow. Even if you weren't looking at the momentum slowing, what I would say is, right now Revolt is probably doing work with, 100 to 150 of the top 5 Fortune 500. Where are the other 350, right? When this thing first happened, the data that was out there was saying that Black-owned media is 1% of the total industry. That was in 2020. Well, Ad Age just reached the report that says even after doubling the industry over the last 2 years, we're just now getting to 1%. And so we're still very much in this challenge where Black folks and Black-owned media are getting pennies. And the energy around fueling the dreams of transforming the media landscape by fueling Black-owned media is getting smaller.
You mentioned, of course, in the discussion around Black Tech Week, the amount of Fortune 500 executives or focus that there is on your community at the moment, Candice. Well, within that Fortune 500, less than a percentage of it are CEOs who are people of color, or at least Black. I'm interested in your perspective, Candice, and what you want people who come to your event to take away. What key points if I'm a budding entrepreneur who wants to continue to drive this change? What 2 or 3 things can I go away and do to easily start to bring about change for myself?
Oh, I mean, we are the change. We don't stop regardless. I mean, Tope from Calendly bootstrapped his business to the point where then people noticed what he was doing. We've got Delali from Fearless in Baltimore, who's bootstrapped his business to $1 billion valuation. And so we're going to keep pushing and we're going to keep doing it. It's harder, and that is unfortunate, but we are, and people are taking notice. We've got Andreessen coming in to look at companies, Capitalize, Drive, Kport, New Voices, our own fund, Lightship Capital.
Which is, remind us,
yes,
50 million?
Yeah. We have a $50 million fund, yes.
And that's being committed at the moment?
That's right.
Come to us when you've got some checks to talk about as well and the companies you're backing. In the meantime, we wish you a very good week ahead.
Absolutely.
Lightship founder and CEO Candice
Thank you very much.
and Revolt CEO Datavio Samuels, thank you both very much indeed. Meanwhile, coming up, look, we're going to be looking at that VC outlook. We're just talking about A16Z, about Lighthouse. What about the VC pulse right now? Carl Stanford, lead VC analyst at PitchBook. I'm afraid it's not pretty for Q2. There's the Bloomberg Technology. PitchBook out with its latest report on the health of the VC world. And the results, they're somewhat mixed. Let's bring in PitchBook lead VC analyst Carl Stanford for today's VC Spotlight. And Carl, I mean, I say mixed. They're pretty ugly, actually, if you're continuing to look at Q2.
Yeah, I mean, unsurprisingly, VC stayed pretty, tepid in Q2. We had deal count kind of level off around 4,000 deals, which I should mention is above any quarter before 2021. But deal value is still really low, right? It's getting pushed up by OpenAI and pushed up by Stripe's deal this year. But exits look really dismal. Obviously, the public market has not opened up yet for VC-backed companies. M&A is still really low as well. Obviously, with the FTC, still making sure that they are putting pressure on the M&A market. We haven't seen much movement there either.
Can you break it down geographically a little bit for us as well, Kyle? Because often on this show, we're trying to represent that, look, technology is being built everywhere. Technology is being backed everywhere. But look, really, Europe and Asia in particular seem to have a marked slowdown.
Yeah, that's right. I mean, I think when you're comparing the U.S. versus some of the other markets, the U.S. is much more developed. There's a larger group of large investors that are able to really push up that deal value. So it's going to look a little less of a dampened market than when you look at Europe or in Asia. Asia too as well. China obviously having a very difficult time with their VC market. There's been a lot of tensions between the U.S. and the Chinese governments, which is pressuring the market there as well. So, U.S. has stayed, relatively strong compared to the other markets around the world, but still dampened here.
And are there particular rays of light? I felt like everyone was really rather hanging their hat on AI would come to save the day in terms of the startups that are getting backed. Is that something that you see in the numbers?
Yeah, right. Well, I think it's a little more, it's a little different than that, right? Generative AI, obviously getting a lot of attention right now, getting a lot of investment. And as a subsector of AI, that is seeing an increase over what we would have seen in 2022 or 2021. But AI in general is not going to pull back the venture market. Overall, the investment into AI is lower than what we saw in 2021 as a broader market. So, everywhere we look, venture is a little bit slower than it was in 2022, which is much slower than in 2021.
And of course, that IPO market is firmly shut for the time being, unless you're a salad-based company or perhaps some energy drink or indeed a water company that's called Liquid Death that I think is at some point looking at an IPO in 2024. It seems to be the news. But second, exits, limited, if any?
Very limited, right? We're still at about $12 billion in exit value generated this year. The record of 2021 was about $775 billion. So right there, you can see how much lower that market is. And of that $77.5 billion, a lot of the 86% was IPOs, right? Kava obviously was a nice exit for VC, but it's not a tech company. And so it's not going to bring back the IPO market in a material way. We're still looking for those S1s to be filed. again, if you're a salad company or if you're a liquid death water company, you've made that move, but we haven't seen any material movement from the tech companies yet.
And do you think regulation is hindering it too, in terms of big tech spending?
Yeah, of course, right? You can think of Microsoft or Amazon willing to take on the FTC because they have the cash behind them to do it. But if you're making $1 billion deal, are you going to spend $100 million to fight the FTC to get that deal done? Maybe not, right? But I think when we look at the public markets too, obviously with the number of unicorns we have in the U.S., somewhere around 800, IPO is going to be the more common route for those unicorns to go public or to exit. And without the public markets willing to accept the kind of growth at all costs models, we're going to see a lot of these companies continue to wait out the exit market.
Wait them out. Kyle Stanford, we thank you always for shining a light on what's happening in the world of VC and money flows. We thank you from PitchBook. Meanwhile, coming up, let's bring you some transparency on what's happening over at Walt Disney, extending the CEO Bob Iger's contract for another 2 years. So much for that succession in real life. Meanwhile, before we head to break, let's just have a quick check-in on Apple. Interesting around labor at the moment. Talks with its first unionized US retail store reached a kind of flashpoint, we understand. The labor representatives filing a complaint in response to what they called bad faith negotiations. They said that the iPhone maker is stalling, hasn't responded to key proposals sought by the employees. Currently holding up 0.3% though on a day where we see tech markedly higher. From New York, this is Bloomberg Technology.
Bob is, I think, one of the great CEOs of our time. I think he cares a lot about Disney. He's been a great steward. I think he's, the news doesn't surprise me. I didn't have any, I learned about it here. I didn't actually know in advance, but I think it's part of what you want CEOs to be doing, which is acting like owners and feeling that the important thing is the legacy of the company that they hand on to their successors, to employees, to society, and I think Bob is that guy.
Greylock partners Reid Hoffman there, reacting to the news that Bob Iger's contract was extended at Disney. Sat there talking to him was Ed Ludlow right now, still in Sun Valley. And it was interesting, Reid Hoffman talking about Bob Iger in that way, I think almost exactly word for word. One of the best CEOs I've ever seen was Steve Pagliuca as well, of Bain Capital. Clearly, yes. People are relieved.
It's been the universal response. And, the board's thinking on this is that it's continuity of leadership and it gives more time for succession. And I think if there's still the question mark, it is succession. During that extended interview with CNBC, Iger was really quick to make the point that this is partly what it's about. It gives them more time for whoever comes next. But if you look at some of the sell side reaction or the market reaction, they basically point to this as being evidence that they hadn't come up with anyone, that the internal candidates weren't good enough. So there are still questions about the future of this company, but Iger's on the job.
And how much did that upset some of the potential successors who are currently there in Sun Valley with him, right? I understand there's Josh DeMario, of course, we've got the Parks chairman there, TV chief there, we've got film boss as well.
So what sources have been telling me is that the CEO search in terms of interviews rounds has been ongoing anyway. And, during that interview earlier this morning, Iger did say or disputed the idea that internally people aren't ready to step up. He said actually he thinks they are. It's just that they need more time for this transition. What's so interesting is how candid he was about things that Disney got wrong. He stood by Disney Plus being priced at $6.99 because they knew that at the time they wanted subs. But they got the marketing wrong. And there are other parts of the business, linear TV, sports, where he's like, look, I'm going to act. But universally, the response is Bob Iger is the right man for the job. He's the only person that can get this giant that is Disney transitioning into a more digital, streaming-focused business that is profitable ultimately.
The conversation, other than streaming wars, what else are you going to be keeping an eye on for the day?
Yeah, I think that there's just this massive overhang with Activision and Microsoft. The FTC appeal was a bit of a surprise, came really quickly. Then what's the response from the companies? We have a July 18th deadline, and you and I love a deadline. It gives us something to talk about until that point. Hopefully they'll extend it.
Oh, Ed, I know you're going to be pushing up to those deadlines and getting the great news for us. Thank you so much. Of course, Ed Ludlow out there in Sun Valley. That does it for this edition of Bloomberg Technology. You do not want to forget to check out our podcast. Find it on the terminal, as well as online, on Apple, on Spotify, and on iHeart. From New York and from Idaho, this is Bloomberg Technology.